Now, the beautiful thing with PayPal, the valuation is disgusting. So cheap, it's ridiculous. This is why I call it stealing money. I mean, we're trading at P's of, forward P's of 13, 11, 10. Come on, man. That's the type of PEs you're talking about for a company that's doomed. They're going to shrink forever. It's, their best days are way behind them. That's not the case with PayPal. Wait to see the revenues in a few years from now in the EPS. This is a company that's expected. This is analyst expectations. These aren't even my expectations. I probably have a little higher expectations for PayPal. But just based upon analyst expectations, there's this company growing obviously very nice double digits in terms of EPS. And I think those numbers are low. I think every one of those numbers are low. I think they're going to grow much more in that. But even if you're just going to base upon what analysts believe, right, then this company should not be trading at these sorts of value. You don't put companies that have forward P's of 10 or 11 on them and say they can grow double-digit percentage EPS year in and year out. That's not the way this game works, okay? And so, nonetheless, this company is so disgustingly undervalued right now. No, the thing with PayPal, right, is the way I look at PayPal is it's kind of this mansion that's like built in the hood, okay? And so you're looking at it, it's like, wow, this is such a beautiful home here, but it's in such a neighborhood that we're not too sure about, right? And that's the way PayPal is in the stock market, because PayPal is stuck with a lot of stocks around it that are very questionable, or people look at it very questionable, okay? For instance, it gets grouped into the same class as a stock like Square, right? Where I don't personally have a problem with Square, but let's be honest, there's a lot of people that do have problems with Square, okay? Hindenburg Research, right, which is a famous kind of, I guess you say short sellers that do these very in-depth reports on these companies and really go after them. They did this extremely in-depth one a few months ago on Square, right, called Block, and how inflated user metrics and frictionless fraud enables insiders to cash out over $1 billion. They went in on Square, right? And so PayPal gets grouped into a stock like that. PayPal gets grouped into a stock like Affirm, right? Affirm is down 86, 87%, right? And a lot of people are wondering if there was a big recession, if Affirm would even be around anymore, okay? Even if there was a mild recession, people are concerned if Affirm would even be around anymore at that point in time, right? So you look at a company like Affirm, and this is the type of companies that PayPal gets grouped into. Another company is Upstart, right? Upstart's a stock that's down 77% over the past, we can say 18, 20 months, something like that. And the way I put it to you like this, right? Remember my meta buy, right, from last year in Q4 of 2022, right? I'd put it to you like this, and this I think will click for a lot of people in their minds, okay? This is like saying Meta should get grouped in with Twitter. Meta should get grouped in with Snapchat. It doesn't make sense, okay? It doesn't make sense at all. Like, Meta's a whole different animal that's just, their scale is so much larger, they're so much more dominant, they're so much bigger, they're so much better in with advertisers. Like, you shouldn't, like, to group them in with those sorts of stocks, you could do it, but it's stupid. It doesn't make sense. And that's exactly what they're doing with PayPal. They group them in with these other companies, and it's like PayPal's a whole different animal. You can't just say, well, because this company is similar to this company, they're the same. They're not the same, okay? It's the same as like trying to say Amazon's the same as eBay, because, gosh, they both sell things online, so I guess Amazon's the same as eBay, right? No, of course not. It's ridiculous. It's preposterous. But this is what people do, okay? And this is what Wall Street does. Doesn't make any dang sense, but they do it. And it presents somebody like myself, in my opinion, a phenomenal buying opportunity and an ability to make a lot of money over this next few years in a stock like this without taking very much risk, in my personal opinion. We'll see how it all plays out, but that is my belief, okay? Now, in relation to me and kind of how big my PayPal position is getting now at this point in time, okay? So these are the shares I own in the public account. I own 718 shares in the public account. I do own it in the Patreon portfolio as well, PayPal. It's actually up to my second biggest position in the Patreon portfolio now, but this is a public account. So 718 shares there. I also, in terms of the shares I bought yesterday, that was in the an Ally account I have, which, I've been trying out Ally for the last, year or so as far as their investing platform. How do I put this nicely? It's not very good, okay? Especially when you come from Fidelity Investments, to try some of these other services is like, ugh, like, are you kidding me? Okay, but anyways, I still do have an investment account with Ally, and it's not fun kind of investing with them. But nonetheless, folks, yes, that is PayPal. There's a problem coming for Rivian, though. I will admit it, okay? There's a huge problem coming for Rivian. Do you know what that huge problem is? I'll tell you what it is. Cybertruck. So the beautiful thing for Rivian is they haven't had any serious competition. Let's just call it what it is, okay? There is no serious competition for really Rivian and Tesla in any significant way from what we've seen so far, right? So the beautiful thing with Rivian is they haven't even had to compete with Tesla yet because they've been so heavy on the pickup truck. The day the Cybertruck starts to get out there, and by the way, I saw a Cybertruck next to a Rivian truck. This was Franz was recently driving one. He just happened to go by one, and I was like, dang, that Cybertruck looks so much more epic than a Rivian. It makes Rivian look like just a traditional truck. That's going to hurt Rivian in a substantial way, okay? And so we do have to talk about that. I don't know if it's, could hurt them long term because I think Rivian can continue to grow for a long time, but there's no doubt it's going to steal a lot of sales over the next, in my opinion, in 2024 specifically. And that could definitely put a dent in Rivian's numbers there. When you talk about good old Tesla Model S, I mean, that's going to be no joke to compete against the Cybertruck. It's going to be vicious, just to be honest. It's going to be absolutely brutal. But up until this time, if you want a pickup truck, like, you're going to get a Rivian truck. Like, this is the bottom line. Now it's like, do I get a Cybertruck or do I get a Rivian? And I'll just be honest, Cybertruck's going to win most of those conversations. Meta has the perfect storm going, folks. I mean, absolutely the perfect storm going right now. You need really two things to kind of be the perfect storm. One, you need the revenue story to come through. And with Meta, the revenue story is coming through in a massive way. Advertising market looks like it's going to shape up better than folks anticipated 6 months ago, 9 months ago. That's phenomenal, right? On top of that, WhatsApp monetization coming through, Instagram Reels scale up, and now monetization is going to really start shining through in the back half of this year and as we go into 2024. You have Quest 3 that's going to hit the market, right, which is a huge monetization opportunity, including now they have a monthly plan that's like, if I recall, $8 a month that I think a lot of people are going to sign up for in regards to the Quest 3 product. So that's coming through. You have the checkmark service, which is like $15 a month, which massive amounts of folks have signed up for to have the blue verification badges for many various reasons. People sign up for that, right? That's a huge new kind of vector there. And so the revenue side is so exciting for this next several years for Meta. It's ridiculous, okay? But to add fuel to the fire, and this is huge, is they just performed massive, epic employee cuts, okay? So we're talking about a business that all of a sudden is going to have these million different monetization avenues coming over the next couple of years, while they're going to be really lean, which means what? That earnings per share, that net income is going to fly, okay, absolutely fly. And we know Zuckerberg has said that he wants to keep the business as lean as possible kind of moving forward because they can move faster, which it looks like his work is paying off because it looks like Meta's moving faster than any public company in the world right now. There's no one that's moving at the speed that Meta's moving at right now. So it's clear that Zuckerberg's moves making his. So Meta could continue to hire in future years, but they're going to do it at a very modest level compared to that insanity the way they were hiring in the past. So, folks, there's several avenues that are just extremely enticing. And as the metaverse builds out and it becomes, a bigger and bigger revenue story, that cuts down those losses that business has been hemorrhaging money. $1 billion plus a month it hemorrhages. What happens when they get it to break even? Which probably isn't happening this year, certainly not, but maybe 2-3 years out. And then what happens when it starts to actually make money? And instead of losing $1 billion to $2 billion a month on that business, it starts making them $1 billion to $2 billion a month on that business, or a lot more in that, folks. So, my gosh, okay. So that's why Meta's a perfect storm here. It's got the top line story on lock now for the next several years, and it's got the bottom line story on lock for the next several years. And that's why there's a reason I got it as my biggest position in the public account, because this is the ideal situation.